This episode of Profiles in Risk is sponsored by InsurTech Insights New York City, the largest InsurTech conference of the spring season. Join us on June 5th and 6th in New York City at the beautiful Javits Center as we dive into the future of insurance technology. Use discount code INERDS25 to save 25% on your ticket. See you in New York! Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Gage Caligaris, founder and CEO at Ledgebrook. Gage, how's it going today?
It's going great, Tony. Thanks so much for having me on the show.
Awesome. My pleasure. You are, according to LinkedIn, in Boston. So Boston, we're recording on April 5th, just before the eclipse that's hitting a lot of North America. Is the eclipse going to be visible from Boston?
I've been so busy, I haven't checked it out myself, but I've seen some goggles for sale in the CVS to make sure your eyes are safe. So maybe it's very possible, but can't say I'm an expert on that stuff myself.
I've got to say that okay, so I'm looking at the map. No, it's gonna go through like Buffalo area, so and it's kind of this way. So yeah, it's gonna miss you guys. Okay, perfect. That makes sense. Although I was gonna say the I'm not sure if the eclipse is going through here or not is one of the great actuarial lines of all time. All right, actuaries tend to be like really focused on their thing, right? All right, so you've got kind of an interesting background. I've got to say, you credentialed actuary and not ACAS but FCAS, right? So like an actuarial fellow, a casualty actuarial fellow with a math degree from Harvard, a CFA, and an interesting work history since then. So your LinkedIn is interesting. So we always give the guest the chance to give the elevator pitch. What is Ledgebrook?
Yeah, sure thing. So Ledgebrook is a tech-enabled E&S MGA. And so basically the idea for the company is kind of similar to my own background in that you've got this kind of high-powered data tech-forward kind of element with the insurance insider actuary kind of status. And so to take both of those things and then apply that to some of the more maybe niche backwater parts of the insurance industry, namely for us E&S, that was kind of the idea. And so the same thing for Ledgebrook. So what we're doing is we're taking the best of modern technology, the best of Silicon Valley engineers, as well as the best of insurance people, and combining that into an offering that is, we think, very compelling. So for the brokers, there's really two value propositions, Tony. For the brokers, it's pretty simple. It's do the same thing you do with anybody else, but you're just going to get these quotes back faster, more consistently. And we'll use our technology to free up the underwriters to actually pick up the phone. That's the number one thing we actually get great feedback on, is not only are you guys having fast quotes, but you're there for when we need you. So that's pretty straightforward from what our customer wants. But then on the data side, on the profitability side, that's where really the secret sauce is, in the sense that we're both collecting more data from each submission from the third-party data sources, and we're storing this data efficiently and in a modern way so that we can use it easily for analysis, for updating the pricing model, as well as implementation. Honestly, that I used to be the pricing actuary for GL at Liberty Mutual, and there were definitely some hurdles to overcome in terms of even getting our data out of our own systems and doing the modeling. But even if you knew exactly what you wanted to do, it would take years to implement I kid you not. A small change on the system would be, 6 months, $1 million, and a full scale change, multiple years. And so being able to actually implement the learnings is just as key. So for Ledgebrook, kind of best of both worlds. We've got the insurance expertise at the front door, and then also this technology advantage on the back end.
Okay. So tech-enabled E&S MGA. Okay. I like the way that you describe E&S as the more niche backwater area of the industry. and bringing together the best of modern technology, the best engineering, and the best insurance knowledge, combining it all together into this MGA, and then being data forward, not just technology up front, kind of thing, right?
That's
Yeah.
right. Yeah.
Um,
So
mhm.
you
Go
got
ahead.
it. You got it, Tony. 100%.
So I I'm a former middle market underwriter. I spent 6 years in a rotation when I was at Nationwide, at Scottsdale Insurance, the old great E&S carrier owned by Nationwide, now Nationwide E&S. But I was never I was never in the E&S space, right? I do have my SLI, so my understanding of E&S is a bit limited. What I have, well, I do from my SLI. I did learn that E&S is basically a safety valve for the insurance industry. When we can't do it in admitted, maybe E&S can do it with much less regulation, and they can be more creative because of that lack of regulation, right? And the clients get treated more like knowledgeable risk managers who can make real choices regarding their coverage, where they don't need to be protected by regulators. Um, so now the hard part on the NS side, my understanding, is often there's not enough data, right? Often it's like brand new risks, like when Uber first started, kind of thing. Often, maybe we do have data, but it's so risky that it's very hard to find traditional cover for it. I don't know, like a shuttle, like a space shuttle launch kind of thing, right? Like we have enough data, but it is a very risky thing, so it's very hard to insure. Um, so what I don't know is what did the traditional E&S MGAs. So I know that a lot of E&S business, it gets written through MGAs, but what did those MGAs look like before Ledgebrook came around? What was the standard in that space?
Yeah, that's a great question. And I'll start by kind of addressing your understanding of what the E&S marketplace is. So I think you got most of it right for the listeners out there. To come to the E&S market, you actually have to be rejected by at least 3 admitted carriers. So you're not able to place business in the admitted market. And usually that's it looks off for some reason, right? So either there are, it's in a particular jurisdiction, or there's a loss on it, or the exposure is something that's, instead of a condo building, you could have a condo in Miami, or you could have, a student housing. We don't do student housing, but you can see these are different type of risks that are maybe a little riskier than your kind of vanilla admitted market stuff. And so when it comes to the E&S market, we have freedom of rate and form, so we don't have to file anything. We can charge whatever we think is appropriate for the risk, as well as we can put more limitations in coverage, like firearms exclusions, assault and battery sublimits, things of that nature. So by kind of getting a little bit creative with the coverage and pricing, you can find a rate that's appropriate for these risks, and it acts as that, escape valve, right? Everybody, all these businesses need coverage, or else they can't operate. And then I guess one other thing to mention about our space, you said we're a middle market underwriter. That's what we're doing too. So our minimum premium is actually 25,000 for most risks. We'll go a little lower on manufacturing, construction, some of our target industries, but and we can go up to 500,000. So we're in that middle market to upper middle market space. And so what that allows us to do is, instead of, a lot of times in insurtech, you think automation of the very small end of the spectrum here, we're using that automation to take a lot of the friction out of the traditional, artisanal underwriting process, so to speak. And then, maintaining that expertise. So it's still worthwhile for a human being to underwrite a $100,000 policy. It's probably not wise to automate something like that, at least at this point in time. And so that's kind of how we address use technology to address the E&S market.
So the reputation of E&S underwriting, when I started in the industry back in 09, the reputation of E&S underwriting was like, that's where the back of the napkin handshake deals at the pub in London, kind of thing, or I'm guessing in Scottsdale or Richmond, Virginia, or Atlanta, Georgia, which are the ENS hubs here in the States. But that's where it really, they had a reputation for like handshake deals that maybe did not have a lot of actuarial uh, structure backing data, right? So the fact that you are an FCAS yourself, I am curious. Um, and also you came from Liberty GL. Liberty is largely an admitted carrier. They do own which one is it? Was it Navigators? No. Navigators was the hard part.
Ironshore, I think
LIU.
is
They do
yes.
own an LIU, which bought some ENS carrier while I was there. So they do have an ENS side. Now it's bothering me. Which ENS carrier was it? The Liberty bought when I was
I think it was Ironshore is what you might be
Ironshore.
thinking of.
Yes. So they do
Yes.
own Ironshore, but they're really an admitted carrier, right? You were
Yes.
a GL admitted actuarial leader. So what was it like going from that very structured world to an ENS MGA?
I mean, frankly, I like it quite a bit. I mean, we're still using a lot of the ISO-based pricing, right? Which is really based on admitted policies that are smaller in size, under 25,000. So to go from that uh, foundational pricing base to an E&S policy that's of larger size, you have to do some translation, I guess. But the nice thing about being having that freedom of rate and form, right? You're not going to get behind the eight ball. And the other thing I think too that made me feel good about launching when we did is we're coming on the tail end of a hard market here where, some of the 5, 6 years ago, the GL results were poor. So rate action has been very healthy over the last 5 years. And so we're at a plateau or a level where I think the market is very healthy, very sound. And the other thing that we get a chance to do is we have a human being touching all these policies as well, right? So, mentioned earlier, we're not automating away that underwriting where you can get caught out if if the market finds out you're too cheap in a certain area. But for us, with somebody touching all of it, we get the best of both worlds. So we definitely, I would say we're at, market in terms of pricing sophistication. When I got that GL underwriting leader job at Liberty, during the interview process, they told me, look, Gage, GL is unmodelable as a line of business. I don't know if that's true, but I'd say the sophistication level is significantly lower than it would be for most of your other lines, just because of how broad the set of industries that you have to cover are, the different operations, all these sorts of things. So to me, it's an opportunity, right? When I hear it's unmodelable or it's not that sophisticated or isn't a great thing. If you can be a little bit smarter, there's a real opportunity here to have outsized results, especially when you've got the goalie in there for every policy.
Yeah, that makes perfect sense. If a good part of the industry thinks that it's not doable or that it's not modelable, if you can figure out how to apply modern technology, modern techniques to it, um, and I can totally see how that was much easier to do outside of a giant company. Uh,
Yes, in terms of building the systems and recruiting the talent and all these type of things, we can move much faster, I would say, than we were able to do within the Liberty mothership.
so looking at the website, you guys really market four things: fastest time to quote, but yes, speed is radically important. Uh, Easiest submission process. Okay, data empowered human underwriting, love that term, and white glove experience powered by technology. Tell me about the submission process. So in my world, in middle market, the submission process was an accord form with sometimes hundreds of pages. Uh, what was the submission process in E&S before you guys, and what is it with you guys?
That's a great question. So basically what we're doing as our go-to-market strategy, we're not telling brokers to do anything different than they're already using. So we work with the big wholesalers, right? RT, Amwins, Bridge, CRC, and so they send us an email in whatever formats they have. If it's Accord forms, that's great. And that makes our life a little bit easier, but realistically, E&S is not standardized as the admitted world. So we have to do, all our technology is internal. So take whatever you send us, and then we have to, just like everybody else, translate the information in that application into our systems, append third-party data, rate it up, do all of these types of things. And so we're getting that then finished product to the underwriter's desk faster than our competitors can, allowing them the time to go through their underwriting processes, et cetera, et cetera. And so first, do nothing different is what we're saying. But then I'd say the second part of the process that people like is that we respond, very quickly with a yes, no, or maybe. And the maybes, if that would be, hey, I need these 2 pieces of information additional to tell you whether I can do this account or not. It's not a list of 10 things. It's not a punch list for every account that, just bogs down the process. Very targeted, always responsive. And so you're getting less friction. We're not asking you to do anything new. You're getting less friction throughout the process. And then at the end of the day, when it comes to make that backroom deal, our underwriters will get creative. They'll get on the phone with you and say, hey, all right, if I can move the deductible up here and I can kind of get this sublimit in, I think I can make it work for your client. So that's that white glove service. So that whole process just makes it easy, I guess, for the wholesaler.
And how fast is fast?
Fast, so definitely same day, within a few hours, typically, and then we sub at 1 hour if it's a super rush. We've quoted policies at 1:30 in the afternoon when they come in at 12:45 for
Okay.
next day effectives. And
I
so
I was
in
definitely not
those,
expecting that fast in E&S.
right, it's and we don't always do that, right? But when that's where our product really stands out. So one of the interesting things about E&S is about half of our submission flow comes in with less than 2 weeks until the effective date. So
Fighting the admitted market, and they finally gave
they
up.
give up, right? It comes in, but you don't get the 90 days, right, for everything where you can spend it, send it over to the actuary. They can take a week with it and get back to you. It's like brokers need a price now, especially because in the wholesale market, the wholesaler has to then go back to the retailer, who has to go to the client, who has to go back to the retailer, back to the wholesaler, back to like there's a whole daisy chain. So speed is paramount when you just don't have a lot of time and there's a lot of parties that need to coordinate communication. And so that's where it
It's
really does matter.
Yeah, E&S going through a wholesaler is basically the largest chain of steps, right? In our entire industry, it's like where you really end up with a whole bunch of cooks in different parts of the process. Um, Very interesting. I never thought of E&S as a speed game. I thought of small commercial as a speed game. So it's a really interesting way to play it. Okay, so right now you guys are doing GL, professional liability, and excess casualty is coming.
Excess casualty is coming. We do have a supported excess capability for preferred industries on our current GL offering, but we're
Okay.
also looking to launch an unsupported excess at some point that will be able to attach anywhere in the tower, whether we write the underlying or not. So a similar product to what we're offering in terms of coverage, but more flexible there. And we're also looking to come out with an A&E architects and engineers product. So hopefully both of those by the summertime should be out in the market or imminent, and then that'll put us at 4 product lines. And so I think what we've seen so far is, hey, the tech works, right? We were able to process thousands of submissions, hundreds of millions of dollars in premium without, a hitch. And so let's take what's working and let's franchise that out. Let's bring in other underwriting leaders who are very tenured, experienced, plug them into the tech, let them do what they do best, hang their shingle under the Ledgebrook banner and go from there. And so that's one of the ways we'll gain efficiencies. A lot of times, that's, I guess, a little different than a traditional MGA. A lot of times your MGAs will be, an inch wide and a mile deep, and maybe in only one sector or one line of business, or one line of business in one sector. Our kind of model is to take that technology and apply it across the board, but always with a lot of the same things we're talking about with that data forward mentality, as well as with, 2 hands on the wheel, goalie, underwriter touching every policy. So always, the policy sizes will vary, but always be that middle market to upper middle market type space.
All right. So yeah, I was thinking you're playing in a pretty broad part of the E&S market, because it's not often that you see even just GL and professional
No.
kind of by the same people, right? Professional is its own specialty. So very, very, very interesting. So you talked about the data afterwards, right? So that we write the policy or we don't manage to write the policy, and then the data is actually getting used to improve things. How is the data being used afterwards?
That's a great question. And so it's still relatively early days in terms of data collection, but to give you one recent example, so we're ingesting all of the loss histories on all of our submissions that we get. And so at this point, we've processed probably $600 million in submission flow for the GL product, and maybe 350 million in losses that come along with that. And so as we're talking with our fronting carrier about, the assault and battery sublimits, we can say, okay, let's take a look at the actual data of all the submissions we're seeing. How prevalent is our A and B losses? Turns out they're at about 2% of the losses, which was significantly lower than I might have thought. And it's even lower when you think about what's below the limit versus, what's really in that excess layer. So we're able to say, okay, let's wrap our heads around what the exposure is here. Can we get a little bit more aggressive in terms of being able to offer, silent coverage there, or things of that nature. So that's one type of area that we're using to collect data. And then to give you a 2-for-1, Tony, I'll give you a technology example as well. We're using AI and machine learning, but more AI to target areas of the underwriting process that are, I call them like micro use cases. So for example, we do restaurants or bars, right? And a lot of the Accord forms will come and say they close at midnight. Yeah, of course they do, but all the the losses are happening in the parking lot at 2 a.m. So the underwriter, as part of that process, would be, okay, let me go on Google, let me figure out if there's photos of this, what are the actual operating hours. We just can get an AI, thing to just find that out consistently, accurately. And then now the underwriter doesn't have to do that. It's 10 minutes, 15 minutes out of their day. It's more accurate, it's more efficient. And we're avoiding the ones that are open till 2 or 3 that say they're open till 12. Our competitors get those, and then it's kind of a virtuous cycle. So we're both collecting data and then also using technology to append data to our submissions in a thoughtful way.
Okay. What's the origin story? How did this come to be? Like, you had a great thing going at Liberty Mutual, 4 promotions in 8 years. You get your FCAS. You were fairly set for life. How did you how did you decide that this was a need and that you were the right people to do it?
Yeah, that's a great question. Because I love Liberty, right? You don't spend
Great
8
company,
years.
yeah.
at somewhere that you don't like being, right? And I came up from the bottom too, right? So I started as after kind of quitting high finance, I started as an intern back in 2014, and then came up through the system, getting my exams, managing pricing teams. And then I think when my son was born in 2020, kind of it caused me to reflect on, okay, like I'm a father. This is a very common kind of, from what I understand, what am I going to do with the rest of my life? This changes everything for me in a certain way. And so what I wanted to do personally was I came up with just two things. I wanted to be a great husband and father, and I wanted to build something. And that was it. Like there was no third item. When I was at Liberty at that time, I decided to try to build something internally, right? So that mobility business, as soon as I got back from paternity leave, went over to apply. So now I'm out of the actuarial world into the product world. So we're working with the Ubers, the Lyfts, Waymo, Turo, the scooter companies, you name it, right? And so building that business from about 40 million to almost 500 over the next 18 20 months allowed me to kind of test out some of the, do I really want to do this? The answer is heck yes. It's incredibly long hours, it's incredibly stressful at times, but I absolutely love doing it. And so then also got to practice the skills necessary to take that outside of Liberty. And so then I kind of got to thinking about some of the things I mentioned earlier. What do I offer that might be unique from what other people would do, and what areas of the insurance industry kind of are most in need of a facelift. And so that's kind of what led me to the E&S space. But really, it was a very purposeful kind of thing. So I want to build something. And I guess as we go forward too, you can ask anybody that works with, or I pitch this. I'm building Ledgebrook for the rest of my career, for the rest of my life. I'm not trying to sell this thing or flip it in a couple of years, or anything like that. My 2-year-old daughter is next in line for the CEO role when she turns, yeah. When I get too long in the tooth for it. So like really, I just want to build. I want to build an insurance company, and we're 2 years into it at this point, and sky's the limit.
It's a wonderful story. And doing it bootstrapped is uh I I'm I'm not an insurtech founder. I'm not part of the gold rush. I sell well, I read a newsletter basically about the gold rush, and run a television channel about the gold rush, and I sell shovels to the gold rush. But I have the conversation with many founders, right? And once they take funding, right? If they take VC money, that's it. Like you have to grow quickly. You have to IPO or find the buyer. You have to find an exit, and you lose control. So as I love the ones that are bootstrapping it and that want to run it forever. I believe that well, two things. Number one, I love the insurtechs that are founded by us, right? It's not a tech person looking for it's not a tech founder looking for an insurance nail, right? They have a cool tech hammer looking for an insurance nail, and it's one of us that really understands a need in our space.
Yeah.
And then number two, I love the ones that are bootstrapping it and that want to run it forever, because I believe that they're going to build a much more sustainable businesses that will actually make a difference in our industry, and will be great places to work at, and great partners to partner with. So fantastic. Thank you. Wonderful story. Look forward to see you guys continue to grow. And love to have you back in a couple of years to talk about what else you guys are doing, what the results have been. It looks like 2 years in, you've got quite a bit going for you.
Yeah, we've been successful so far. I do want to, we're not exactly bootstrapped though, I would say.
Okay.
So we started by raising just over $4 million of VC money right around the time I quit 2 years ago.
Okay.
Since then, we've added another 29 million or so. So I've taken in 30 something million.
So
Still
so
different than the bootstrap.
so very much look forward to see if you can continue running it forever.
Yeah, well, that's the hope. I mean, our investors will need liquidity, our employees will need
You're gonna have to
liquidity.
IPO at some point, yeah.
Yeah. But I think, there's many examples of founders who have IPO'd and then led the company multiple decades into the future. So for me, that's the plan. But I've been very blessed to have fantastic support from the venture community. We just last week announced our Series A, $24 million, led by American
That's
Family
large
Ventures.
for A. Congratulations.
It is, yeah. We feel very blessed to have that strong support there, and AmFam has been fantastic, and yes, this will really allow us to you start to go from one product to two to three to four, as well as building out some of the additional technology capabilities that will allow us to automate more steps of the process. It requires some funds to do that, and so that's where that money will be going. But yeah, really fuel to the fire after first couple years.
And did you say AmFam?
That's right.
Okay, so backed by AmFam Ventures.
That's correct.
Fantastic. Much better off with AmFam or Munich Re or with an insurance investor rather than a pure VC play. That's really good. Thank you so much for your time. Like I said, I look forward to have you back in a couple of years to see how things are going and hear what the results have been and what other areas of E&S you guys are playing in.
Likewise, Tony. Thanks so much for having me on the show today.
Thank you.